prices were mixed. You had aluminium, copper, zinc and nickel falling between 0.2 and 2.1%. Lead managed a 1.1% rise. Yeah, Bloomberg's story actually caught my eye this morning. Data compiled in the US showed options traders increasing bearish wages on commodities companies at the fastest rate in just under 2 years. Maybe it's not that surprising considering growth in China is slowing and Europe is really struggling to contain the debt crisis. But my next guest says growth might slow further in China over the next quarter before it recovers. Larry Shover is from Efficient Capital Management. He joins us now from the CME Group in Chicago. And Larry, this is a great chance to chat with you because we get growth numbers next week from China. When you say things will get worse before they get better, will we see this reflected in next week's numbers? How steep is this drop going to be?
Well, it's really easy to see right now because they have the two main drivers suffering. We have the exports and we have the real estate. Both those things in China are suffering right now. The fact the U.S. and the Europe exports are suffering from China, and then you have sales dropping off in the real estate market. Keep in mind that 25% of the economy in China is driven by construction spending, and property prices are off, at least in the major cities. So I don't think just dropping the reserve rate requirement, although that's a good thing, it's not a great thing for the long term because the fact of the matter is they have other issues to deal with.
So they still have to ease conditions further, and that happens into next year, or what are you expecting from monetary policy?
Well, on the other hand, I am expecting, I'm not expecting a hard landing in China. It's not going to be as soft as I first thought because in the next 6 months or so, they're going to work really hard at promoting economic growth, stop worrying about inflation because that's a thing of the past. The fact of the matter is, commodity prices will stay firm because of that, but because they're going to be working so hard at internal economic development. So I think for the next 6 months or so, they're going to continue to loosen policy. That's going to free up money for commodities and internal development. I think it's really, really a tightrope situation in China, but I think 6 months are going to be the hardest test.
So inflation is not the #1 concern anymore, but when it comes to the data next week, you're still saying inflation is actually the one to watch. Now, why?
Yeah, I mean, right now, the Chinese policy seems to be not worrying about inflation whatsoever. They're worrying a lot more about export. They're worrying about the real estate market. They're worrying about their internal demand. The fact of the matter is they're putting a lot more focus in emerging markets, realizing the fact that even if Europe has some type of miracle, some type of bonanza that comes out on Friday, their problems are pretty deep, and they have to focus a lot more on the emerging markets. So with that said, China is just moving their policy shift in a way towards the emerging markets and their internal needs.
But that CPI read will really determine how quickly they can move, won't it?
Absolutely, and that CPI number is absolutely critical. I mean, that comes on a bad reading that we saw on the PMI, that below 50, that's signifying some type of contraction. The fact of the matter is the GDP in China is still going to be reasonably good, but the fact we need to look at CPI and see how quick that turns around.
Larry, some thoughts from you perhaps on the EU summit. Can you remind me again why this is the all-important summit, kind of more important than the last all-important summit and the one before that too?
Yeah, I think the longer you go down the road, the more important things get. And I think the fact of the matter is what's going to happen is going to be a big bonanza where they're going to probably come out with some grandiose statement where unenforceable policies, things that are just unimaginable, putting 3% deficit limits on France, something that they could never enforce. But the fact of the matter is, I think Draghi will come out and propose something that was similar to like the Magna Carta or the rights of man or something really big. And probably I can envision them expanding the ECB into debt monetization. The financial markets will love it. Germany's going to hate it. But the fact of the matter is we've been rallying all this week based on the fact that the markets know something that we don't know. And I think debt monetization through the ECB to fund the IMF is the name of the game.
So where do you think we'll be sitting this time next week, Larry, when we catch up with you?
I think we're going to be higher. I think everything's going to be higher. And that's why I'm actually not willing to lay out a short in copper. People are saying copper prices are too high with a slowdown, this, that, and the other thing. But consider what happened last week. Very small policy moves, and the market rallies 4%. copper rallies as much as you could see. And the fact of the matter is, I think any kind of good news, we're going to go back to where we need to go. Speaking of copper, I mean, there's such a shortage in China right now. Even though people think it's high, it does have a lot of room to go higher still because scrap levels are an all-time low. So I think copper is going to be higher. I think the equity market's going to be higher after this Friday.
Larry, great to get your call. We appreciate it. And all the best the next few days. Thanks.